Addie, Deborah, Diane, Doug, Glenn, Greg, Jack, Jamie. All right. Hopefully everyone can see that chat box there. If you have questions, you can always ask me, okay? So you can see the at the open orders for today that's starting off. It's a long order at 29.2750. I want to show you this just to see where it goes. More importantly, I want to discuss how we're going to approach the end of the year. Typically, I like to look at the broader picture to tell me where the market is going. So if I think about the market as the end of the year approaches, what are the opportunities? The opportunities are to the long side, in my opinion, and we have to now time the opportunities right. Because if you just jump in, the markets can still go lower. And if anyone has any issues with the questions and answer chat box there, you can always email me your questions at support@daytradetowin.com. I'm happy to answer them as well. You got it. Okay. So when I think about the market coming into the end of the year, we have to look at the broader picture. So I'll leave this up here and I'm going to switch here to a daily chart. And we can see that the market has been going up and down. There's political issues that are happening. China, all those things do play a role in the market. But I really want to focus on the candles and what they're telling me and where we're going. So if I'm thinking long, why am I thinking long? The first month of the year is very important. It tells us whether or not we'll have an up year or down year. I do this every year. There's many videos on this. It's the January effect that I teach some of my students on looking, and you can look on YouTube. You can see all those videos there that I have on looking at the first month of the year telling me what to expect. And so if I expect the market to go up based on this idea of the January effect, and if I just look at the first month of the year, you could see from from January 1st to February 1st, you can see that the market went up. What that tells me, and it's a very high probability, that the year is going to be an up year. Now, it's not perfect, but it's very high, above 90% accurate year over year, that the market will end higher as we get into December 2020, which we're approaching. Now, it doesn't mean buy, it doesn't mean hold, it doesn't mean, wither through all the ups and downs and the pain. It means we have to time it. If we are going to go long based on this idea, look for opportunities to the long side. Now, there are many ideas that we can have on how to go long based off of this. The one that I like to do, which I think is a safer, more controlled, more risk diverse, is waiting for the market to retrace and then returning back up to test the highs. Markets love to test where they've previously been, especially making new highs. As you could see, the market for the year just kept on going higher and higher and higher. So every time we have a type of pullback, which I'll explain how to interpret what a pullback is, we have this opportunity to go long as it returns back up. So the important notes to take from this is to say, I understand that we have a January effect in place because the month of January closed higher than where it opened. And every time the market retraces and then returns back up, I have an opportunity to buy it. Now, a pullback can be interpreted once again in many different ways, right? What's a pullback? In my opinion, a pullback is a number of days that the market retraces, and then as it begins to come back up, we have an opportunity to buy. It can't be a 1 day pullback or a 2 day pullback. It really does have to be something significant. All right, now as the market comes back, you can see that there's another opportunity. It has to make a new high, which it did here and here and here and here. And then once again, it retraces back. It's not just 1, 2, 3 days. Make sure that this retracement that you're looking at is significant enough that you could say it's a retracement after making new highs, which this is. Once again, what do? We come back and look at this and say, my entry long will be as soon as the market breaks, and you can see it here in this candle, breaks to the long side. All right, now that being said, it's clear in this example that the market broke it and then immediately retraced back down and didn't continue like the other example, like this one, just kept on going. Where's my stop, or how do I protect myself? It's very important to look at and to think of pivots and pivotal stops. I like to use a pivotal stop in this type of trading, which is the market stopped and started to come back. So as soon as it comes back down and breaks this pivot, here is an opportunity to have your stop loss, as long as it's within reason, or it's not that large, or we can say the trade is still good to go if it happens to come back up. This lowest low from the pivot plus a few ticks. I always like to add a little bit of a couple of ticks below that as my pivotal stop. So this is a long entry. The market flip-flopped here for a day or two and then continued higher. Now, if you are concerned about the large from 2830 to 2800 or 2792, if you're concerned about that, have a stop if it reverses. In this example, have a stop, and then if it happens to come back up, you can buy it again. So there's no reason for you to have and hold a losing position for such a large loss. This isn't a day trade example. This is more of a trade that you hold and you make a bigger move, a bigger profit, whether it's the Nasdaq, the Dow, the Russell, any market, or even the new mini minis, micro they call them. So you could technically hold on to this unless it breaks this pivot. Your goal is to see it come back and test the highs, which it did, and it continued. So that would be one opportunity to go long as soon as it breaks. And here's another opportunity to go long, which is right here. So as soon as the market breaks the high, you can go ahead and go long. And now the market continues higher. Again, I don't think this is an opportunity to be a pullback. I don't think this is really an opportunity to be a pullback. This is definitely a pullback, a huge pullback. So where do we go long? Why are we going long? Just analyze it as this, right? And I am going long once the market does this here. It breaks this here. From here to here, it's 11 points. I'm not sure if you would want to get out at just 11 points. You may want more, but the market moved from when it broke about 11 points. If you just want 5 or 6, that's great. If you want more than 11, you're going to have to go through this flip-flop back and forth. And remember, the pivotal stop where I definitely say it's over. I'm no longer thinking about this. I'm going to try again. When it does return back up, would be here. As soon as it breaks this pivot, it's the same idea. You would no longer consider this an opportunity. But if this happens to come back up, remember it's testing the high. That's the whole goal. That's the reason behind it. And the same thing here, right? We continue lower. The market stopped at some point. And remember, this is still testing the highs. This here is still where the market wants to test. You can think that it's a long way. It is a long way. But as soon as it broke, it continued. And that's really what I'm after. So that back here where I showed you earlier, this is what I want to see. It continue. And you don't have to hold it for a certain number of days. You don't have to hold it until it touches the high. As long as it starts to go in your favor, lock in some profit, have a trailing stop. As we go forward here in time, as soon as the market hits the double top, the testing here, you want to see the market now break through it for another opportunity. So really that only happened here. When it started to break through it, this is another opportunity to go long. Can you say that this small pullback here is worth it? I don't know. I would be and I can see that it worked. I can see that it would have been successful. But I want to see something more significant. And if you do consider this a pullback, remember, a couple of ticks, a couple of maybe a point or two. As soon as it breaks, you're long, and then just lock in some profit with a trailing stop. Hopefully everyone is okay with that. And if you do have questions, the chat box should be there. And if not, you can email them to me as well. As the market comes higher, once again, you see it broke the highs and continued. There's something called a stochastic pop in the market. It's an old school term that it's not really taught anymore, uh, and I don't use stochastics. But this reminds me, when under technical analysis, it reminds me of what a stochastic pop is, because a lot of people look at indicators and consider overbought, oversold areas is what stochastics is all about, and consider this area overbought or oversold. And that's not always the case. You have to look at the cases where it pops up. And it's a terminology. Again, it's not often used or known. It's called a stochastic pop. And this is what this reminds me of when I see this. It breaks the high and keeps on going. It's not overbought. Okay, now this I would not recommend, or I would not say that this is a retracement. It's only a couple days. It's not really clear to me that that is a retracement. I would instead say that this here, from here to here, is more of a retracement, a pullback, right? And as soon as the market starts to come back up, which happens to be on this candle, this is an opportunity for a long, okay? Opportunity for a long. And in this example, I wish they were all like this, where it just breaks the 50% marker and then keeps on going. They're not all like this, as you can see in the previous examples, but this is nice to see. And as soon as the market starts to go in your favor, even though I'm anticipating that it's going to hit and touch the top and continue through it, please lock in your profits and have a stop. Your pivotal stop would be just under this pivot here, a couple of ticks under that. All right, now if you held on to this and you held on to it and you held on to it and then it just collapsed, you would absolutely 100% get out of this trade as soon as it broke that pivot. That's very important to understand. Okay, like that. Now it did make a new high. That's what I want to see. And then we do this all over again. So here we are as we approach this here. Once again, the market, as soon as it broke the 50% value, if you can see that there, my marker there, it went right through it. And the distance that it went through it, I should say, would be enough for you to at least 35 points, lock in your profit. And with 35 points, and it starts, if it happens to come back, I really hope that some of you took the opportunity to not give back the entire 35 points that it moved like this. Now, on some days, not always, but on some days, you can use other quote unquote indicators, right, or software to help you determine that this is happening. So let me just get a little bit more involved here with this. If you see the market breaking the 50% value, all right, you see it breaking the 50% marker, you're anticipating, we're waiting for it, it's not a surprise, it happens. There's a very specific price, 29.05.75 or 29.05 50 or 29.05 or 29.06, I should say. When it does break that here, look at the 5-minute chart or the hourly chart or the 30-minute chart, something like the Atlas line. If it's above the Atlas line, you have more of a confirmation that the day is long, that it's happening. It's happening above the price that we've already predetermined. And now you could say I'm timing this not just by the value of 29.0575, breaking that. I'm also timing that with a smaller time frame, saying everything is up and it's on its way. So something like the Atlas line can definitely help you with getting in on this on the day that this is happening, right? You have now more confirmation, and the more evidence and the more things that are all happening to the long side, the better situated you are. Now, it did not move much more above the 35 points, and it came back down. So I mean, you're not going to give back 35 points. This would absolutely be your price for the pivotal stop. So this here, 2780 is where I'm indicating I don't want to see the market go below that. And absolutely, if it comes back down and comes back up, you can buy it again, right? So from here to here, it breaks, market moved 30 points, take 5, take 10, take something. So if it came back here, comes back up, same price, you buy it again. Breaks down, comes back up, buy it again. As long as this isn't broken. As long as this isn't broken, it means this move, this situation that we're waiting to happen, which is this, will happen. Well, will happen is not 100%, but that's what I'm after. Okay. All right. So here we are. Market came up, and I would say it fulfilled that idea that once it breaks that 50% marker, it's going to want to test the highs and go through them as long as this doesn't break. And here we are now. So why am I showing this chart to you? Now, as of today, October 10th, I'm showing this to you because there is still an opportunity to buy it. It's not over. I'm still expecting the market to come back up and to not only break this, but to keep on going. So I want to see the market where we are right now, hit that. Now, I don't know for certain if it's going to happen today, tomorrow. It may take a couple of days for it to reach that price. But if you're using something that day after day is telling you long, buy, all green, whether it be news driven, whether it be, and I think that if the US and the China make a deal on this trade situation, this market will explode to the upside and it's going to be a great opportunity. But now this is timing the market to buy. Even if you want to be a buyer today, tomorrow, there's a reason to be a buyer. And as soon as it breaks 30.35, buy it. This is another opportunity to be a buyer. Let me take a look at this here. For today, for the at the open, long 29.2750, long 29.38.75. So these are the orders for the at the open today to be a buyer. Also, if I add here the Atlas line, let's take a look at what that looks like for today. There. And everything is set correctly. Click apply. Click OK. So the Atlas line long signal is 29.33.75 and about 5 points. The ATR is a little bit on the high side, 4.5 here. So really the goal with the Atlas line is to buy it. This is to the upside. Prices above the Atlas line. It's telling me to be a buyer. The signal and the profit target of 4.5, which is, like I said, I have a lot of videos out there on understanding the current conditions, using that as a target. I would recommend going to the DayTradeToWin blog or the YouTube, or even email me. I'm happy to send you guys the videos if it's something specific that you want to learn. And this is the target. Now, all that being said, is it just a blind effort to buy it and trust the software? And I would say no, it's not the way that I would do it. I would take into account the risk. If the market's too volatile, I would take into account if there's any news happening at the time that would maybe create a situation that's undetermined at the time. How far away we are from the Atlas line is also a big deal, because if you're buying it here, the market already started from this point forward. So, buying and being late to this party is also something I have to consider, right? So there's all these things that I cover in the training with the outside, the at the open, and the trade scalper, and other methods. We do live training for all our subscribers. All right, does anyone have any questions? And if you do have questions, like I said, you can email me at support@daytradetowin.com. So this is right now happening live at about 10:30 Eastern Standard. All right, very good, excellent, thank you. All right, so those of you who are interested in Day Trade to Win, we do have a new class starting October 22nd, right? October 22nd. I also have here a coupon code. If anyone is interested in buying any of the software, you can use the coupon code 15 off to get 15% off the courses and software. So if anyone's interested in the Atlas line, the At the Open, the Trade Scalper mentorship, let me know. Email me, and you can use this code 15 off. Does anyone have any questions for me? I'll try to get the video out for everyone. You can review this. I'll try to have more webinars also in the future for everyone. And I'll see you in the next class. Okay.